Good. Okay, well, hello everyone. Welcome to the GCMA members meeting, the fourth of this series that we're doing while we're all in lockdown. I hope everybody's very well, keeping well. We're certainly wishing the best to all our NHS staff. So I think what we have today for you is Mr. John Nottingham and Paul Dudley from Gen 2 Group to talk to us today about business interruption insurance, fact or fiction, and business resilience. And can I ask you all to put your questions to them in the chat box, as usual, for those of you who've been on these meetings before. For those of you who haven't, the chat box is on the bottom of the screen, and just feel free to type in your question as it comes to you, and Bob will field those questions. Could I all ask you for the duration of this meeting to turn your videos off and mute yourselves, please. This will help us at a later date with the size of the file and hopefully the smoothness of the running of the meeting as well. I'll lock the meeting at 2:15, so if anybody's not in at that time, sorry, you'll be able to find it on GCMA TV coming very shortly to you. So I'll hand you over to Bob, our CEO, to introduce you to our guests. Over to you, Bob.
Thanks, Gavin. As Gavin said, we've got a couple of people from the insurance people with us today. This is the fourth meeting we've done now, and they appear to be proving extremely popular. I would say, following last week's meeting with Kevin Fish, we had a really good response, and it's always difficult to then know how and what you follow that with. One of the issues that we're now very much aware of certainly over the last couple of weeks is we've been not badgered, but we've certainly had a number of people asking us about business interruption and what's the issues with business interruption. Can they claim business interruption and so on? And Jim Cunning, who works at HQ with us, has had to field a number of these questions. So continuing with our attempts and efforts to make sure that GCMA keep you up to speed with everything that's going on. And I'm sure most of you have looked into the coronavirus hub now, the information hub, and found the information that you want, or hopefully have found what you want. We've now secured John Nottingham, who's the founder and group CEO of Gen 2, and his partner, Paul Dudley, who's the group chairman. So for the duration of this session, they're going to talk initially about business interruption and try and put you right on business interruption. And that will be followed by business resilience. Once we get to the end of this, or even if you want to put questions in, partway through, we will take the questions. We won't take each one individually because obviously some of them link up and cut across one another, but we will take the questions. This session is being recorded and will be available after the session is finished. So with no further ado, I'm going to hand over to, first of all, John Nottingham. Over to you, John.
Thank you, Bob, and good afternoon, everyone. Thanks for the opportunity to talk to you guys again. I guess we know when we're in unprecedented times when insurance is making the top list of things to talk about. So, yeah, as Bob says, kind of in summary today, from an order of play perspective, we're going to cover off a couple of key viewpoints that are relevant to the situation that we all unfortunately find ourselves in. The first kind of aspect that I'll cover off will be kind of from a risk transfer perspective, a bit of a straight talking, no nonsense look at business interruption insurance. It's a really noisy topic right now. Even before all of this, it's a pretty misunderstood topic in its own right anyway. So we'll try and debunk a few of the myths out there and talk about some of the stuff that's going on and how it's relevant to you guys. And then the kind of second part of the presentation or discussion will be with Paul Dudley, my colleague, who will talk about, from a risk management and a risk mitigation perspective, the kind of topic of business resilience and how do we look forward, and when we all emerge out of this, how do we come out of it the stronger, and how do we learn the lessons of kind of what we're all going through. So I'm really conscious that you know, even in these times, you're busy people. So I want to make sure that you get some value from this. And a couple of the key takeaways that we're trying to achieve for you is that you're a bit more informed and a bit clearer about some of the issues that surround the insurance kind of topic and the business interruption in particular. And also that you're equipped as a team to go back to the club and help kind of make yourselves as resilient as you can going forward when we do emerge from it all. So, Gavin, have we got the slides up? Excellent. So if we could just, next slide, Gavin. So that's the kind of order of play. So we'll kind of go through those things. Next slide, please. So just really quickly, from an introduction to us perspective, we'll whistle through this, but essentially just so you kind of know who we are. We're a relatively new business created in 2017. We're a small group of industry professionals who are trying to do things a little bit differently and bring a different perspective to broking. Fundamentally, though, it's important to note for this call that we're insurance brokers. At our core, our only purpose is to add value to our clients and to help them succeed in business. So at no point today are we here championing the industry at wide. We're not going to defend insurers. We're going to talk really plainly and really honestly. Our focus is our clients and doing the best thing for them, and likewise we'll include you all guys from that perspective as well. Fundamentally, we do have excellent relationships with our insurer partners, and they're kind of a key part of the insurance chain. Obviously, they're the ones that will or won't pay your claims ultimately, but fundamentally we serve our clients. Our core is brokers, so we're a commercial insurance broker. We have a few specialisms that we focus on. Sport is one, so we have a number of sport clients, from golf to other leisure industries, and we're about creating innovative and effective, efficient insurance programs, as you would be familiar and expect us to. We also have a risk management business, which fundamentally is around a key part of our DNA, which is about preventing and mitigating risk as best we can, or planning for it, which is what we'll talk a bit about later on. But we feel it's a massively important part of what we do to bring that into it. And latterly, and not probably less relevant today, but equally important for our business, we have a financial services business. So particularly from a commercial perspective, we can help with real hands-on technical advice and support from pensions or protection products, and a range of employee benefit stuff. So that's just a quick whistle stop introduction to us. In terms of individuals, next slide please, Gavin. From my perspective, so I left corporate life in 2017 happily, having spent most of my 25 years in the industry on that side of the fence. So what I've found is kind of the understanding of how insurers work is a great advantage in being a broker, which is good. But also have a slightly different perspective on the world, having seen I used to manage all of the insurance brokers across the UK and Ireland for a couple of major insurance companies. So I've seen the kind of, I know most of them, I know the good, bad and the indifferent out there. So fundamentally believe that we can try and create something different and operate in a slightly different space. From a lockdown perspective, I'm dealing with an 11-week-old daughter, first time to fatherhood. So if she makes an appearance now, I'll apologise up front. Hopefully she won't. But like you know, I'm kind of dealing with this every day as well. You know, it wasn't in my 3-year plan to have to deal with a global pandemic. So we're deep into furlough conversations and CBILS and all that kind of good stuff. So I think there's a sense that we're all in this together. And from Paul's perspective, so you'll hear from Paul shortly. From my perspective, he's a great partner to have. He's been seen and most things as a broker and experienced most things. He's got a few interesting stories, not least working with Frank Williams on the Ayrton Senna claim in 1994. So that was an unfortunate situation, but an interesting insurance topic. He's currently looking out on a golf course, probably as we speak, onto the 8th green or something, and wishing he was out there playing. But I'm sure we'll be back out there soon, like we all will. Okay, Gavin. Next slide. And again. So, as I said, there's an enormous amount of noise surrounding the insurance industry at the minute, and that's growing daily. In fact, just this morning, there's an MP that's called for an early day motion in EDM in Parliament for all insurers to use their cancelled dividends to pay for all COVID-19 related losses, which is just another story around the same sort of topic. We're going to talk a bit about that in a while. But fundamentally, I mean, the Chancellor kind of has been very clear on this from the start, and he's absolutely right that fundamentally 99+% of businesses out there in the UK do not have any cover for COVID-19 related losses. And we'll talk a bit about kind of why that is. But one of the big things to try and understand is that since there was quite a big shift after 2009, so H1N1 and the last kind of WHO recognised kind of global pandemic triggered a tightening up from an insurer's perspective of wordings. So there was always some language in there around communicable or notifiable disease. That was the first kind of issue where it fundamentally, an insurance policy isn't designed to cover global pandemics. It can't price and it can't operate cover for something that's completely unknown. So as of however many months we are, going back into the back end of last year, COVID-19 didn't exist and coronavirus as a strain didn't exist. So any insurance premium that any company's paid doesn't include there was no intention to include cover for that. What it did was to kind of start to really lock down and list. Most policies now, and all the major insurers have come out and basically said that there's now a list in their wording is a list of communicable diseases, which I'm sure many of you have been poring over hours that you'll never get back looking at policy documents probably. And you might well have seen a number of lists, Legionella and the like, all things that we know for, all things that people can plan for and price for, more importantly. And that essentially is why COVID-19 is not a trigger, an event that can trigger a claim for the most part. Where things do get covered and where some of the, I know some people have got on their mind that it very much talks about having an outbreak on the premises as well. So, one aspect is the disease and whether it's a known disease. The other aspect is kind of how it would trigger. I think, there are certain insurance policies out there that, in spite of the language around disease, actually, if you had an outbreak on your premises and were ordered by local authority to close as a result of that, or you incurred expense or cost around, the actions that you need to take to get that premises back up and running, then fundamentally that there might well be a claim that gets triggered there. I think one thing to note on this, obviously, you've all, as however many people on the call, 200 people on the call, probably have very different policies. And while some of you might be on the same type of wording, every situation is different. So I will kind of caveat all of this with, I will talk very generically. Clearly, every policy is different. But what we've seen and how we've seen, it's been very clear from the most part that the vast majority of policies don't cover. So I guess there's from an insurer perspective, Hiscox is at the forefront of all of this and seems to be getting a lot more noise than anybody else, which on one hand, and at no point do I want you to get any violins out for them, that is a little bit of a shame because they've built their brand around being such a strong insurer from a claims perspective. They would be in the top 3 of most insurance kind of industry surveys around claims capability and claims paying ability. So it's a little bit unfortunate where they've left themselves open, particularly in light with you guys actually, is that they back in what's called a managing general agent. So they distribute a product through a company called Geo Specialty, and Geo specifically kind of target the sports and leisure and entertainment industries. And it's this particular wording that has caused Hiscox a little bit of discomfort and is the creation of all this noise. Now, just to be clear, and again, no violins, but at no point was this policy ever put together to cover a global pandemic. What they have done is they've left themselves a little bit open with some of the legal language they've used in the policy. And if some of you are sitting there on this policy and everything I'm saying is kind of ringing some bells, then hopefully it might be of interest to you. But and they have actually come out now and declined these claims. So they are making a stance and they've taken a legal opinion and they're declining the claims on the basis that they believe that there's some language that they can point to that can defend themselves around occurrence and around the vicinity of the occurrence. So fundamentally trying to say that they weren't designed to cover these type of government or global pandemic lockdowns. The intention of which is absolutely true. The practical reality is they've got some legal language that exposes them. And the clients that we have on that wording, you know, we're kind of talking to daily. They have all been declined or in the process of getting their claims declined, but there are various routes that we're working with them on, and most legal opinion out there, apart from Hiscox's obviously, is that there's a legitimate claim to be made against Hiscox, and that their policy would trigger. So it's an interesting time. It's not something 5 years I've been involved in or heard of, but it does appear there's a growing kind of group arbitration that's probably going to happen against Hiscox. And I know that talking to people in the market that they're kind of expecting that, and frankly they probably want that to happen sooner rather than later, because they've made their stance. They believe they can defend it, and the sooner that they do or don't kind of is pretty key to how their brand recovers from this negative press or not. So I think Hiscox is the very interesting one. There might well be, and I think there are a couple of other insurers, but there'll be very specific situations, probably on very specific wordings. Most of the mainstream, your AXAs, your Avivas, your Alliances, your Zurichs, have all come out and stated that all of their policy wordings as standard exclude specifically anything related to COVID-19, because they point only to the listed notifiable diseases, of which obviously COVID-19 wasn't one. So I hope that's kind of relatively clear. Non-damage denial of access is the crux of the kind of cover, and I'll try not to get too geeky here and talk about that, but it's quite an interesting one, maybe more for us, but an interesting one for you guys to be aware of. It really reared its head, if you all remember the Salisbury sort of terrorist / the Russian kind of poisoning situation. Salisbury as a town or a city was locked down for a period of months, and most businesses had insurance that didn't cover. So all the small business community in and around the centre of Salisbury that was within lockdown didn't have any business interruption cover for that situation, because typically business interruption will all be triggered back to your property. So if your specific place of work is from a denial of access perspective, it does cover things like if you have a problem with your utilities, or there is other kind of reasons of why you can't get to your premise to operate. But fundamentally, it's there for if you have a flood, a fire, or other kind of typical peril covered loss, there's some protection for the business so that you can kind of get back to the position you were in pre-loss. But for when there's not a damage, where there's not a fire, or there's not a flood, or there's not a kind of specific peril that's insured, this non-damage denial of access becomes quite interesting and extremely important, because there are now a number of situations that can occur, this being a very unfortunate case in point. So the language in the policy around denial of access and the non-damage aspect of it is something that I'd urge you to understand and to talk to your broker about. We'll talk a little bit about that in a second. And then quickly, just two very specific points where the insurance industry is paying COVID-19 related claims, not least if there is the odd policy wording from a business interruption policy that pays. The vast majority of the exposure and the payments are going to be made on business travel insurance. So if you have a business travel policy that was incepted before all of this, all of COVID-19 and coronavirus lockdown started to happen, absolutely your business insurance, your travel insurance will pay and is paying. If that policy is renewed, or if you buy a new policy as of now, when COVID-19 is a known issue, there'll be a specific exclusion. So if you've renewed your policies recently and you're a bit unclear, then I'd urge you to get some clarity as to whether that's covered if you haven't already. But certainly there'll be a significant loss to the insurance industry that will have been supporting people who had trips planned that couldn't travel, or have incurred costs because of the cancellation aspect of it, or had to be repatriated because of it. So that's one area. And the other area that may well be relevant to you guys is event insurance or cancellation insurance. So for every type of event, from as big as the Masters or the local kind of conference, so the British Golf Show, for example, down in Wickham, that was scheduled for May, that's moved to October, or your local captain's days, or a corporate day, if there's a significant investment of cost into a specific event, then you can buy insurance specifically to cover that. Now, obviously, all the major events or any mass public gathering of a conference or that type of thing, everything in the music and the entertainment industry, all of that pre-COVID-19, they would have bought something that was that had communicable disease cover in it, because that would obviously be a natural thing that could happen that they would need to insure against. So if you've specifically bought that policy for any specific event, as big or as small as your event may be, then that policy should pay out. COVID-19 would absolutely be an example of a communicable disease that wasn't known about, that policy should trigger a claim for. So that, to give you an example, my previous insurer before I started Gen 2 Group was Chubb, and they were sitting on a £480 million loss just from COVID-19 just in the UK. So that will be an enormous event for the insurance industry. It shouldn't by rights have a knock-on impact into everyday business interruption or commercial insurance generally. It will have a big impact on the event insurance market. So that as a specific part of the industry will have a loss, and I would expect to see premiums rise in that as a result of that going forward. So hopefully that helps with that, Gavin. Next slide, please. So just to kind of talk very quickly on some specifics. So just taking the COVID-19 related situation, just a very quick bit of advice from me would be, fundamentally, I'm sure you already have, but understand your position. Sorry, Gavin. Understand your position from your broker, understand your insurer, the policy wording, what coverage you have or haven't got in force. If you do believe there's grounds, and some of what I've said, kind of you still feel confident that it's not one of, you haven't got this list of notifiable diseases on there, it looks a bit more generic and a bit more open in language, then you may well believe that there's grounds within your policy wording. And that should be something you definitely kind of discuss with your broker and get a plan together as to how you want to approach that. Specifically, we're pointing clients to the first course of action fundamentally is file a complaint with your insurer. And then secondly, for most small businesses, they would kind of fit the support structure or pathway from the Financial Ombudsman Service. So we would definitely investigate the complaint kind of going down that road. From a timeliness and a kind of cost effectiveness perspective, that's probably the best first route to go down. There is, if you are a Hiscox policyholder and some of what I've talked to has resonated with you, then there's a number of pathways for this sort of single group arbitration. Like a lot of people call them class actions. I think I have some aversion to calling that. It feels a very US language, but there's definitely going to be some group arbitration from Hiscox's perspective. So I would go to your broker, understand where those routes are, and kind of get some advice, get some guidance, but pick your pathway and get involved. I think it's very legitimate that you would do that. I think it's unfortunate the stance Hiscox have taken, and I think it'll be a very interesting piece of case law to see how they get on in trying to defend themselves. And last but not least, obviously, you've got a private legal action route if you have the funds and the desire wherewithal to go down that road. In general, I think a couple of things. I think review the advice that you've been given. I think more generally, make sure that you are getting advice or business. I think it's an incredibly. I think and particularly if you look at golf clubs, is a good example actually of something that a lot of people have schemes for golf clubs. A lot of brokers have schemes that they access, specific policies that are put together. A lot of them can have kind of blanket wordings and coverages for business interruption. I would not advise that kind of off-the-shelf BI cover is just taken verbatim. Get some advice. It's a complex area. It's a hugely misunderstood part of the insurance world. They reckon over 50, general stats that get trotted out are that 50% of businesses, small businesses, have some form of underinsurance around business interruption. And without a doubt, it is the single most common cause of business failure in the event of a loss. So it's absolutely critical to long-term survival of a business. Make sure you're getting the right cover. Your earning patterns are a bit more complex than normal businesses. So I think that's even more reason to get better coverage and discussion around business interruption. I think talking to Bob a few days ago, he's experienced a club that had, from an indemnity period perspective, the kind of time it should take you to recover from a loss. That's often a really misunderstood thing. And we talked about an example he had of a club that had a 24-month period, limit of indemnity period, and they were part of a heritage situation. So they're planning a loan, and there was no way they were going to rebuild and get back into that position within 3 years, let alone 2. So they're the types of things that cause companies an awful lot of financial distress if it's not got right. So, and then kind of just lastly to lead into the next session with Paul, unless there's questions that we want to field now, but the two main things are whether there's grey area or not right now about whether cover exists. The one thing for absolute certainty is that there will not be an insurance policy going forward that has any ambiguity whatsoever about whether it covers pandemics. It will exclude it verbatim across the board. So there will be no cover from a business interruption perspective on pandemics. So absolutely, there is going to be another pandemic at some point in the future, and I don't just encourage you to plan for it. There is a lot of noise and a lot of think tanks being put together now between government, a little bit like terrorism is through the 70s. The government had to kind of back a terrorism solution. So something Paul Reed came about, which is a government-backed solution. So you can buy terrorism insurance in the UK specifically from a government-backed solution, a little bit like earthquake insurances if you're on a quake line, or if wildfire, if you're in Australia or California, you can buy cover for those, but they're state or government funded initiatives. Standard insurance from the insurance market will not cover pandemics. So on that, I hope that's been useful. I'm going to pass over to Paul now to talk about what we do with that and how we plan for that.
Thanks, John. Next slide, Gavin, please. And the next one as well, please. Thanks. Good afternoon. Thanks for the attention and calling in for this. It's a good opportunity to talk to you. What I would say is business visit. Now, back one, Gavin, if you would, please. Thank you. There's only 4 simple points on that slide, which is we'll try and explain a little bit about what business resilience is, what your tolerance for disruption is, and the simple steps to get you started. What I would say in all of this is not hindsight, nor is it focused particularly clearly on COVID, but it's more around what lessons have been learned and what education can be given out now moving forwards for these sort of solutions to be put in place. I would also say this bit of the presentation has been produced in association with BCALM. There are no better market leading resilience specialists than BCALM in the UK. So at some point after this, if anybody wants access to BCALM, we're very happy to make that introduction, but they helped us with this element of the presentation. Next one, please, Gavin, if you could. You can just put them all up, Gavin, if you would. Yeah, if you just want. Sorry about this being a little bit busy, folks, but the important thing here with the animation is to show that in real simple terms, what is business continuity? Well, carry on with the slide, Gavin. That'd be really helpful. Thanks. The issue here is that if you lose your services and your ability to provide what you offer, and although it's got cogs on there, it's the cogs of any business that is operating. And therefore, if you lose the ability to continue making those cogs turn, then the business, as in golf clubs and the elements that surround some of the golf clubs in the UK, are seriously affected. It can't offer the complete solution, but what it can do is make sure that you think seriously about how the business will be affected going forward. If you can move on to the next one, Gavin, that would be wonderful. This is probably the most important bit of it, which is the million-dollar question to business continuity planning is how long can you survive if you're affected in a big way, whether your customers or members seek an alternative. Now, right now, clearly golf clubs are shut, and therefore golf clubs aren't going to be available to be used by anybody. But if you've got a spa, a hotel, a big food and beverage, a wedding venue, whatever it might be, the options that could be created post a loss of any sort mean that you could lose those potential customers and members going forward. The number 2 on the slide of reputation being irreparably damaged, that's an interesting one relating back to John's presentation about Hiscox, in that right now I would say Hiscox are damaged very, very badly as a result of this whole set of circumstances. I support John's view that Hiscox in the past and hopefully in the future have a reputation for being a high quality, proud of their brand, behave themselves properly in the event of losses. Their brand is damaged right now, and any major loss that could occur, particularly if it was resulting, say, of a bad food poisoning outbreak at a particular venue, you can have some damaged brands. So that needs thinking through as well. And clearly the third one, most important, is eventually most clubs, most businesses will run out of money. So it is important to work those three things through to come out with what is known as the maximum tolerable period disruption. Probably the only technical phrase you're going to get from me during the next 10 minutes, but that is the thing to work through, is basically, can you design a business resilience, business continuity plan that can design to prevent or anticipate or help you manage such a loss? Next slide, please, Gavin, if you could. So the important thing here, that the head, if you can, yeah, back to the other slide on one, Gavin. I'm just getting the right order. Next one would be perfect. Thank you. That's perfect. Thank you. Great. Thanks. The important thing here is actually the headline, which is invest the time. Businesses in general, and I've had a conversation with actually a client this morning who had 3 years ago invested quite a lot of time into their business continuity planning. Clearly, there was never at that point an expectation around a pandemic. There was more about a major disaster that would affect the trading industry in the UK. And he's relied on that plan that he's put together, and bits of it have been incredibly valuable. A lot of it's been a complete waste of time, but he doesn't know, he didn't know. So by investing the time to cover as much as can be achieved, then you will get parts of that plan, and parts of the investment in the time will reflect in how you react should a major incident occur. So you start by listing all your different revenue streams, and clearly for a club that can be the obvious ones like green fees, membership fees and so on, but it can be food and beverage, it could be accommodation if there's accommodation on site, whether it is a hotel or lodges, it could just simply be golf societies, it could be golf events, it could just be captain's days, it could be anything of where the revenue streams are varied across the whole business. And then for each of those, identify the tolerance for disruption, because clearly annual membership fees for golf clubs is one revenue stream, but in truth, golf societies, golf trips, corporate days, sponsorship from the local business community, and so on and so forth, are all relevant to the income streams that may be lost in the event of something majorly happening in or around the area of the club. And then you need to identify the assets and the resources that support each of those and their respective recovery times, because clubhouse burning down might affect the food and beverage, generally doesn't stop people playing golf. So that's one example. You need to invest the time quite diligently to plan each of those particular considerations. And then you need to focus on anything that can't be reinstated in what is your maximum design capability. So either reduce the likelihood of something happening, or if not, how quickly can you recover and create the functionality to cope with that disruption? Either which, it still comes back to the headline on this slide, which is invest the time. Next one, Gavin, please. So keeping the process simple, it's not complicated. It is just clear on the objectives of the plan. You've got to recover for the period inside whatever you consider to be tolerant. Prioritise the plan by what operations generate you the most revenue. Now that can be revenue, it can be cash flow, it can be profit, it can be simply goodwill in the community. It could be that the biggest event of the year is a major charity day, which is fantastic for the charity that you're doing the work for, but actually the goodwill that the club creates by doing it has a knock-on beneficial value to the business of the club and its associated activities. Or it could be a contribution to the brand. If you're a particularly strong brand in an area, how can that get damaged as well? And the big thing about all of this is, and I've done a lot of these over the years, and in particular in motorsport back in the day, a lot of motorsport teams, most of their revenue is generated out of advertising. So if they don't put 2 racing cars on a track, the sponsors simplistically have the ability to withdraw their sponsorship. There's a lot to it more than that, but that is fundamentally the issue. So you don't focus on the event, you focus on the ability to recover and get back operational to honour your commitments and therefore generate the revenue. And the number 4 point, I think, is one that I put in, which is avoid the what ifs, because you don't know what ifs. Nobody would have thought what if COVID-19 or what if a pandemic would have been as quick moving and as serious as it is right now, because it'll just lead you to driving you mad. And you don't need that. What you need is to consider each part of your own individual businesses and how can you plan to recover from any disaster that they might hit. And the last one is keep it simple. You begin within and build out. So you go from the core of the business and then build out. Slide, Gavin, please. Thanks. So final slide from me, which is the next steps. Put in place the necessary arrangements. That's about devoting time. I keep coming back to it, and we're all busy and we all have difficulties, but actually right now during lockdown to just start to get some things to start to create the outline of a plan, or if you have a plan, and then visit it, look at it, and then addendums to it, how it's currently going on. Test things that are put in place. So an example would be if the clubhouse burnt down, how quickly can you get yourself a porta cabin in the car park? How quickly can you get messages out to the members to say the course is still open? And the incident response plan leads from that, number 3 on the slide, which is that's got to be your go-to document. And what happens if you get the 3 a.m. call in the morning to say either the clubhouse has burnt down, or there's been a murder in the car park, or there's been a sexual activity, or anything. It's not just about ensuring the asset and the property. Have a dry run to see what needs to be improved. That's utopia. In reality, you know, I'm a practical, and John and I run a practical insurance brokers giving practical advice. That's a great idea to have a dry run. You could do it, but what you probably have to do more realistically is just plan it out, sitting around a table in a meeting room to say, okay, we got the call at 3 o'clock in the morning. The police said there's been a murder in the car park. How do we cope with it? From press release to putting a press officer with a high-vis jacket on to make sure that everything goes to that individual person. And lastly, make it part of your business process. The client I was talking to this morning are a manufacturer, so not in the same industry. They make kitchen units, but that client's gone back to the person who was ultimately responsible for the creation of their business continuity plan, and their biggest single consideration was how do they cover off their export market should a major disaster occur. So it is important to get the roles and responsibilities right, and in most clubs you'll have a tight management team. That means you can probably embed the culture pretty easily. I think if you go on to the next slide, Gavin. Those are the names and contact details. I guess that by going on to that one, that will be form part of the recording anyway. That's Andy Fielding, who's the head of sport for Gen 2. Some of you guys may know Andy from his previous life, and then myself and John as well. I hope that was useful. It's not one size fits all, and that was no more designed to be than a whistle-stop view of what we can and can't achieve through business resilience planning. Thank you very much, folks. Back to you, Bob, I think.
Sorry. Thank you, John. Thank you, Paul. Very interesting. So if any of you have got any questions, I mean, now's the time to start putting them in. At the moment, I've just got one question from Peter Dickinson. COVID-19 was made a notifiable disease on the 5th of March. We have notifiable disease cover with no limit as to distance or at the club only. Or the club only needs to be shut by a government agency. I think it's a statement more so than a question. Crossland have just come in. Excellent advice, which I intend to follow and get a plan in place ASAP. I don't know if there's any other things. Is it true that it's actually the reinsurance industry that is forcing the no payout plan? Probably one for you, John.
Sorry, John. Can I pick that up? John, is that okay?
Yeah, I just want to make sure we come back to Peter though, because there is Peter Dixon has got a valid question that I'll come back to.
Deal with that first, John.
Yeah, sure. So, Peter, yeah, good question. I think fundamentally, if you've got cover, great. And if there's no limit on distance and there's specific language about government agency shutdown, then there's ticks in boxes there. Where I think the crux of the matter is going to be, every policy will have some language about notifiable disease. The crux is going to be whether it lists the notifiable diseases or not. So the reason that most people don't have cover is that it's notifiable disease, which is listed as X, Y, and Z, including Legionella and blah, blah, blah. And obviously COVID-19 is not going to be on that list. So if you don't have a list, if the language is broad enough that just says notifiable disease without definition, and you've got no limit and distance and the government agency piece, then it would sound like you might have some legitimate claim. In which case your broker should be advising that. We're happy to offer some second opinion if you share some details, but yeah, your broker should be on your side on that situation. But just check that list of notifiable disease, because that is what people are getting caught out by.
Okay, thanks, John. Paul, you were going to take the question, is it true that it's actually the reinsurance industry that is forcing the no payout plan?
Sure, it's a very good question. What I would say is that COVID-19 is expensive for the industry, and John referred to the phrase of let's not get the violins out for insurers, and I would support that completely. The COVID-19 is an expensive sector that's going to pay out a lot of money for all sorts of claims, as John has alluded to, with event cancellation, business travel, and the odd business interruption claim. The decision to pay or make claims legitimate or otherwise is left with the insurer. They do not have any pressure from their reinsurer. The reinsurers will simply pick up the tab of anything that is passed through the reinsurance program back to them ultimately. So I would say if anybody has suggested the reinsurance market, this is just the Gen 2 and the Paul Dudley opinion, but I would not at all suggest the pressure is coming from reinsurers. It's around the insurance industry generally is going to have a beating out of this. And as I said, no violins intended. We're brokers. I've been doing it for 40 years. You know, insurers generally over the years perform reasonably well. The government thing this morning that John made reference to, the MP from Clyde Cumbria was suggesting that Aviva, RSA and Hiscox should use their dividends that they were going to pay out to fund the BI losses for the claimants for this incident. It won't be enough. It won't be enough. So whatever happens, this is a significant band of losses, whether we include BI, business interruption, in the total sum paid out, or we exclude it. It's a very big number. No pressure, I believe, from reinsurers.
I'd add to that as well, Paul, just to say that from my experience of working at insurers, I've had a lot of dealings with reinsurers over the years, and absolutely, Paul's 100% right. There won't be any pressure. The other thing to bear in mind is from a reinsurance perspective, the reinsurance market is by definition global. So they look at global. So the strength of the reinsurance market typically year in, year out is driven by windstorm. It's driven by the hurricane season, because that's where the massive reinsurance exposures lie. With all of the way that most of the cover's written out, that's not really up for debate. The grey area plus the claims that are included is not, whilst it's going to be significant, as Paul said, and I restate the violin comment, it's nowhere near enough to move the reinsurance needle. It's just not big enough, isn't it, as a single event? You'd need a double World Trade Center loss with a massively bad hurricane season and something major happening on the east coast of the US before it really moved the reinsurance market. So it's just not big enough event. Good question though, Anthony.
Okay, another one from Declan. Our broker believes that the terms used in our policy is ambiguous enough to warrant a claim, although the insurers are saying no. How would you suggest proceeding?
Yeah, I mean, I'd suggest as per my slide really, at first point of call, official complaint to the insurer. If the financial ombudsman route should be a pathway open to you unless you're an Declan's part of a very large business. If I would suggest that's probably the next route, and then depending on who the insurer is, there is the legal action and potentially the group litigation option if you're one of the Hiscox policyholders, I would suggest.
Okay, thank you. Michael Sawaki, my policy specifically mentions one disease it won't cover. Does this give me a better chance of a claim?
I think I'm slightly confused with the question. It mentions one disease that it won't.
My policy specifically mentions one disease it won't cover. Does this give me a better chance of a claim?
Wouldn't necessarily. I'd probably want to see it without wanting to sit on the fence. It's very unusual that a policy would specify what it doesn't cover. It usually would tell you what it does cover and then exclude the rest.
John, can I come in?
Yeah, of course you can.
I think what I would say to that is probably reading between the lines. It may be that it's the specific exclusion is over a particular disease that is not covered. The point that John was about to make, I think, is how much of the list of covered diseases is in there as well, or is it unspecified notable diseases? Now, if it's unspecified notable diseases but excluding X, and X is not COVID, which clearly it probably isn't, because the policy would have been taken out, then on the face of it, that sounds like it's got a fair chance of being considered.
Can I just come in? Somebody else had just come in and said, my policy details 2 diseases it specifically won't cover. So an interesting extension of that. Another one from Clive Bailey. Should we get a reduction in premiums due to fall in our turnover and wage roll as a result of COVID?
Yes.
Yeah.
Short and simple answer, yes. Depending upon the type of policy that it's been based upon, and again, very difficult to be so generic, but some package policies that are out there are not adjustable on payroll and turnover figures. A lot are. So if it's not a package policy where the rating factors that the underwriter has taken into account when fixing the premium includes the payroll and turnover, and the turnover in the current year has fallen off a cliff and the payroll's fallen off a cliff. Remember, payroll is the gross payroll, so you can't not declare the furlough payroll if you furlough people, because they are still a payroll cost. If your turnover is halved, then that element of the policy that is applicable rated on that turnover should reflect that reduced turnover. Absolutely, yes. And if your broker or your insurer disagrees with that, then I would strongly recommend a challenge, because it has to reflect a reduced exposure for the activities. And when the payroll and turnover element of the policy relates to the liability insurance, clearly nobody's falling over at a golf course at the moment, or hitting anybody, or falling over on a dance floor in a golf club's hospitality area, because they're not trading. So they should absolutely be reflected in reduced premium.
Okay, just an interesting one, a short one. Are you aware of any claims being accepted by insurers at the moment, or is it still too early?
I think there are examples of it. I think of the 2 specific policy areas I mentioned, they are all paying out without a doubt. I think business interruption losses, we personally as a business don't have any that have gone through, but that's mostly just because our clients are with the most kind of, the mainstream insurers who have all got specific exclusionary language. Our contentious ones are the Hiscox ones, but there will be the odd scheme somewhere that will have language included in it, and where there was some noise around. The FCA issued an open letter encouraging insurers to pay, and that is directed at insurers that have got wordings that do allow legitimate claims. They need to be fast track claims. There need to be interim payments issued. So I think some people misunderstood that if they saw that in the press. The FCA were giving guidance to those who do have legitimate claims. They were just telling those insurers to pay quickly, promptly, and do part interim payments where it's applicable to help the business kind of survive the short-term cash flow crisis. So,
okay, on the same sort of thing, one broker feels we have a claim and he's investigating this as we speak. The one condition that is interesting is that the outbreak must be within 1 mile of the premises. will we need to prove this fact? And hey, how can we?
Yeah.
Yeah.
Paul and I are smirking at the same time. This is slap bang in the bullseye of the Hiscox issue. This vicinity wording and definition is what's extremely challenging for Hiscox right now. How do you how do you define a vicinity of a global outbreak? There will be somebody within 25 miles that's got COVID-19.
Well,
so is that an outbreak? Is that?
I will come in and I'll break in there, because the next question is, what is the significance of a distance limitation? My policy refers to a notifiable disease manifested by any person within a 25-mile radius.
Yeah. So, I think, speak for Paul and I, we both think that type of language is extraordinarily difficult, and from an insurer's perspective, I think they're going to find that difficult to stand behind. It's written specifically for the traditional perils around business interruption. It's very easy to define an incident within a 25-mile radius. When it comes to a pandemic, it's just impossible to kind of work within those types of definitions.
Okay. Interesting one from Neil Annandale. In your business recovery plan, part of the presentation, you focused on major incidents such as the clubhouse burning down or a murder in the car park. Should a good plan drill down into the detail and include items such as equipment breakdown, influences, etc., which are more likely to impact on clubs?
Yeah, that's a very good question. Yes, is the short answer. I think where you need to establish is what's going to be majorly impacting on the business. So a breakdown or a major loss of a particular item of plant, is that going to be a serious effect to the business? But it should drill down. You start from the top in terms of the most obvious and word. The problem with that, it comes back to what I said earlier, which is you've got to challenge over time. You have to invest the time. Really good question, and yes, absolutely should drill down into it.
I think the easiest place to start with that is a sort of a likelihood versus severity kind of matrix. The types of things, how likely is it versus how severe would it be if it happens? And clearly, those sorts of machinery things are much more likely than a major fire. But the severity of it might change how you plan behind that. But that's the role in the broker and the advisor to help you through those sort of challenges.
Okay. We have an email subsequent to the COVID-19 outbreak from our insurer via our broker, which explicitly states BI cover for coronavirus up to 100K if closed by a competent authority and the outbreak is within 25 miles.
Yeah, the 100 grand is a common inner limit. So that would be a typical to the denial of access type language within a word in 100,000 or 250,000. There's typically an inner limit of cover. So that bit is not a surprise, and that the rest of it is kind of typical language that we've heard. I think, I don't know about your view, Paul, but my view would be that there's that should be challenged.
Definitely. Yeah.
Okay. Last couple. Ours has point blank said we have no claim. I will be looking at it again. And our policy states that BI is covered if forcibly closed down by a relevant authorised body. Is this a good sign?
Yeah, I mean, in isolation as a question, yes, Karen, it is. I think the crux is the rest of the detail we talked about, the list of notifiable disease and that type of language. So, but yes, in theory, yeah, that's a tick in a box. But there's a few other boxes to think about.
If Ed Richardson, if we have a 1 mile limit as per other policies, and a member of staff who lives on site who has been diagnosed and treated for COVID-19 but not tested due to no hospitalization. I'll read it again. We have a 1 mile limit as per other policies, and a member of staff who lives on site who has been diagnosed and treated for COVID-19 but not tested due to hospitalization.
Interesting one, Ed. I would say
Yeah.
if they live on site, then you're in the realms of that out. I think what they would try and look at is how they've contracted it. If they've contracted it on site, then by definition you're within the 1 mile vicinity language. So I think that kind of been diagnosed. How would you be diagnosed if you're not tested?
Not sure.
That was the question that I got, was the diagnosis element. But John's right. Having somebody resident on site, if it can be proven that's where it started, but they may give it to somebody else within. It may get passed on within any other resident staff on site, or they may have got it from their other half or whoever who doesn't live on site. So it's proving that, I think.
Okay. Final one. Does the meaning of outbreak mean where it started, i.e. China?
No.
Okay. Right, gentlemen, thank you very much for your help. That's been most informative. For those GCMA members, I hope you've got a lot out of that. We will be here again next Wednesday, 2 o'clock. Next Wednesday at 2 o'clock, we've invited Jeremy Tomlinson from England Golf, Chief Executive of England Golf, to come and join us. Jeremy will be giving an insight in what's happening in England Golf and how they're preparing for the future. Please keep looking at the GCMA website, the information hub. That's where the information is kept. That's where we will hopefully deliver it to you. This will be online as from tomorrow, and we'll send it out a link to you. Many thanks. See you guys.
Thanks, everyone.
Thank you very much. Bye-bye. Bye.
Bye. Thank you.
Thank you very much, everyone. Thanks for your great etiquette on that call today. And look for the recording on GCMA TV. Thanks, and see you next week.